You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com and co-hosts, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com.
And welcome back to the Option Block. This is Mark Sebastian, founder of OptionPit.com, and really the most awesome commentator on the planet, among other things. And joining me on the All-Star panel, well, it's not really a panel today. I guess it's an All-Star duet is really the way to think about it today, right, Mike? Is, of course, the myth, the man, the legend, the lovable, the loquacious Mike Tusaw.
You had me.
Welcome, Mike.
You had me at loquacious.
Well, there you go. So what's happening up in your neck of the woods, good friend?
Well, a couple things. I mean, we can get right to it today. We have a lot to talk about as to what went on in markets today. I'm just going down the list here. In my neck of the woods, I had to roll down a 205-200 put spread on SPY that expired tomorrow. If we're touching the 20, I mean, I did this earlier in the day, granted, but with that, I'm rolled down to a 201-196 put spread for next week, and it's one to where the vol was high enough to where we still have a shot at making this a profitable trade, even though the market's gone against us just because vol has come up so much.
It's crazy. We're currently off 6 more handles in S&P futures since the close of business at 3 o'clock. We're right now it's about 3:12, so we're near the close of trading for SPY options, and I'll tell you, Mike, they are absolutely obliterating the market. This is going to end up being the biggest down day of the year. It's going to end up being the biggest, and we broke just about every single technical chart. If you're a Fibonacci person, the big fib was 2038, got just completely taken out. Other people look at 2033, completely taken out. 200-day moving average taken out. Low July lows taken out. You name it. We are now we're now within. We may actually where we are right now is the low close of the year.
I think I'm just looking at it. We have been low.
No, you're right. It's not the low close of the year. I apologize. It's the lowest close since February, and really puts us all the way back to, other than that little dip in January, it's about as low as we've been. But since we came out of that post-January funk, we are at really the lowest level since then, and pretty nice. So let me give you a date. This is going to be the lowest close since
I think February
2nd.
Groundhog.
Yep, Groundhog.
February 4th, I think we closed at. Oh no, we were higher on February 4th.
Yeah, no, February 9th. Nope. So this is the close since February. We're now 7 handles lower. This is the lowest close since February 2nd. So call it the lowest close in 6.5 months. Pretty crazy. A pretty insane move, and just really surprising how big this move has been. It's and the speed with which it's happened has been pretty impressive.
It is. I'm just a couple things other thoughts that I have to add to this. First one is that I'd like to talk to whoever is against options in an IRA. We talked about this a little bit last week on the show. There's a lot of guns and badges coming after the financial advisors with the things that are happening right now in some hearings. And so what's going on is that they're trying to make things a little bit more strict and redefine the word fiduciary with ERISA. Now, one of the things with which they're talking about, and we talked about on the show last week when your partner in crime was on the show, Andrew, that they're looking to possibly get rid of option trading in an IRA and ways with which you can be compensated for it and things like that. I'd like to talk to some of those people today, and I'd like to talk to them and show them how options can be a good thing in an IRA when used for hedging. The second thing that comes to mind,
or even income production.
Oh, absolutely. Yeah. And today hedging obviously.
100 reasons. Yeah, today hedging for sure. There are 100 reasons.
Yeah, but today is obviously the one that it's most paramount at this stage. But the other things to keep in mind is that stick to your trading rules, folks. I've been talking about on the show. I've been waiting for 213.78 to start buying calls again. I've been a broken record on this. I don't even know how long, quite honestly. And so we're down on the year, and I've been selling some put spreads here and there, and I have to have some deltas on the table just because of the fact that I have to maintain my trading rules and the objectives of my portfolios. But right now, I'm still at a stage to where we have broken the mark of 5% off of our all-time high. We broke that actually about 2 minutes after the close today on SPY. And so now would be a stage to where I would start looking to get into the market again, but I would still caution, and because of the fact that I've set at 5%, but I can tell you right now, on this sharp of a drop, I'm not going to be buying any calls tomorrow morning. I can tell you that without even looking. But the other thing that I'd like to mention on it is that be patient. And if you feel like you're missing the upside at some point, chances are you're going to get a pullback and get another opportunity at some point in time to get back into the market. You can always get back in. And if you miss a couple points to the upside, it's not the end of the world. But when you have days like today, I'm very happy. I'm the world's biggest bull. No smart mouth comments, Mark. I'm the world's biggest bull. And because of that, I have to be bullish based on the objectives that I give out to my clients. But because of the fact that today, the only thing that I had to worry about was a pretty far out of the money put spread, rolling it down to something even further out of the money next week because Val shot up so high. It's not a bad place to be, folks. I've had plenty of phone calls with clients upset with me because we're not matching the market in my hedged portfolios. But I've never had a client call me because we've blown out their portfolio, and that's a record with which I intend to keep intact.
That's a great point. Lots of great points, really, there, Mike. And, before we delve too deep into, how silly that rule would be, let's talk about what actually happened in the market today. So at the market, the SPY and SPX technically settled 2035.73 and SPY 2204.01. After hours, SPY's trading down another 72 cents, and the S&P futures are down another $7. So another big move, breaking through some big technical levels. The VIX cash level settled 19.14, which is a huge move. And we saw the Russell down 30. What was interesting is Russell led all day, and then toward the end of the day, completely folded and overtook both the S&P and the Dow. The Dow was down about 350, S&P down about 44, and the NASDAQ 100 was down 140 points, 3%, an absolute crushing of just about every single momentum stock you can name, and in addition, a crushing of all the good performers. So let's talk about some names and how bad they got beat. So we'll start with the soft losers. Apple was down 2%, mild win. We saw Google only down a little over 2%. Amazon was down 3%. Alibaba is down almost 4%, is now within $3 to IPO price. We saw some other names absolutely get destroyed. The big Momo names, the names everybody loves. Tesla was off 5%. Netflix, the old Widowmaker, down almost 8%, down $10,
Whoa.
$9.57. And now here's the one that I think blows everyone away. Disney Company, Walt Disney and Company, down $6.40. 6% sell-off. And this after coming from 125. It's lost $25 this month. Absolute obliteration. Volatility now near 30% in Walt Disney and Company. About the only bright spot you can find anywhere, bonds and oil. Oil managed to settle only down a little bit, and really the only real bright spot was bonds, which were up sharply. And of course the dollar. The dollar backed off some. So all the pieces today point toward the market starting to think that maybe a Fed hike doesn't happen, but all sorts of craziness. What were your clients looking at today besides the S&P? I mean, did you have guys that were saying, "Wow, Disney, how do I get into that?" Or was everybody hitting the sell button for you?
Well, a couple things here in terms of
gold was a bright spot as well.
Yeah,
Excuse me.
Yeah, gold was definitely gold was shiny today, to say the least. I think we talked about gold a little bit on our Monday show.
We did.
And so I think gold's coming near a bottom, and we went over that. I'm not going to beat it. I'm not going to reiterate that, but it is. But a couple of other things that I'm seeing here on the day in terms of the bright spots, and the fact that these are some bright spots tells me that there is some cause for concern. Now, Wal-Mart just had really crappy earnings recently, but today they're only down 14 cents. They had their earnings a couple days ago, and then so they already got hit a little bit going into earnings, and they got hit a little bit after the earnings. So today, with them being down only 14 cents, Walmart's a very stable company, and that's one where I think that is kind of not necessarily a flight to safety, but relatively speaking, it's a flight to safety from something like Alibaba or Apple or some of the names with which you had mentioned. Another one is McDonald's. With the market down 2% like it was, McDonald's is the type of company that I don't care how rotten the economy is, people are going to find a way to buy their Big Macs and their Quarter Pounders on that dollar menu. I don't see any way around that. McDonald's today was only down 1.3%. Market was down significantly higher. So there were some bright spots, but it's a down market when the bright spots that I'm seeing here are the ones that just aren't down as much, so to speak. In terms of just some other things that caught my eye on the day, even though oil did not move down significantly, XLE, it's down 1.5% on the day. That's definitely significant. TLT, not only did it go higher, but TLT is actually positive on the year again. And that's something that I think is a pretty significant thing. We had a close to the upside. TLT's close in 2014 was 125.92. Closed today at 126.02, and it's been struggling to gain some ground. But the fact that it did get that close that was positive today, I think that's another cause for concern with this market. FXI, China, that's down 2.5%. That's really not a huge deal in comparison to what everything else is doing, nor is it a surprise, but it's something that does need to be mentioned. If you do have long-term bullishness on China, this might be an opportunity to start maybe selling some 34s or something like that. Who knows? But today was something to where everything across the board, it's very difficult to find bullishness. I saw and I was just split. Sometimes I like to watch the financial news on the day just to see what things are going. Maybe I can see Sebastian on TV. That's always exciting when I get to see you.
It is exciting, isn't it?
I know.
Yes.
But I was seeing something today, and it was Jim Cramer was on TV. He was saying, "I'm looking at Brazilian bonds. It's not a good sign when I'm looking for something in Brazilian bonds." And he's right. The more and more that we dig on this, all signs today point to everything being down. Now, does that mean it's going to continue? Who knows? Time will tell. But just to go through it, everything today, everything is not awesome today in terms of quoting the Lego movie.
No, it is not, to say the least. Yeah, no, just ugliness abounds. what was interesting was up until and let me know if you saw this, up until probably the last 7 minutes of the day, the sell-off was extremely orderly. We didn't see these big gaps. We opened up down 25, briefly rallied to up 19, and then from there, kind of eased off the throttle all day. Just slightly lower, slightly lower, slightly lower, slightly lower, slightly lower all day. And it really wasn't until the last, call it the last hour or so, or the last, really 7 minutes to the last 15 minutes after the bell, where the market really gave away a lot fast. We gave away 35 points, 35 points for the first 6 hours and 23 minutes. And then in the final 22 minutes, we gave another 15 points away. Pretty phenomenal that end of day move.
Yeah, I think what it is that there had to have been a lot of MOC orders, market on close orders with stocks, and I think word was getting out of that early. It's obvious there was a lot of market on close orders, just by evidence of the sell-off in the futures right after the bell today. But combine that with, I believe that there was a lot of talk of MOC orders, so to speak, about 15 minutes before the close. The rumor of it caused people to go to the door, and then the MOC orders right at the close. You combine those two things, and you get the result of a 2% down day and then another 7 points at the beginning of the show.
Yeah, pretty phenomenal.
So I'm curious to see how the VIX reacts to this tomorrow.
I think that we could have a day tomorrow where maybe volatility is unchanged and the market is down, unless we get unless we open up down another 1.5%, because now that the VIX is basically settled 19, you're going to need a pretty strong push. The other piece that's kind of interesting is that VIX is now almost 2 points above the September future, and September and October are kind of flat on top of each other, and pretty interesting. Just across the board, volatility in VVIX and everything just exploded higher, and pretty phenomenal the way things moved. So, yeah, I mean, I think it's very interesting to see all the action today. Early on, the VIX futures were not trailing VIX cash. That toward the end of the day, they started to start to follow it, and that's kind of the way everything ended up moving around. Are you
guys looking to do any positioning in VIX tomorrow? I mean, obviously, you want to see what happens overnight, but
maybe. I really need to see. I need to see a down VIX before I can. I need to see the market have a reason to rally before I can step in. I just don't. This market is untrustworthy. All right. So again, oil, VIX, whole 9 yards, you name it. Ugly day across the board. And with that, let's roll out of the trading block, the opening block and trading block. We never really introduced the trading block, did we? And let's move into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, and welcome to the Odd Block. This is where I'm going to talk about some trades I saw. And a couple interesting ones today, Mike. The first one is in Microsoft Corp. Microsoft has an average daily volume of about 76,000 contracts. By midday, it traded about 110,000. And on the day, Microsoft in total traded 127,000 contracts. So near double its volume. Big trade of the day. Trader bought the April 50-55 call spread, paying 99 cents. Did not appear tied. Clearly was bullish, a big premium buy. with the stock trading, about 45, 60. So the guy's looking for a minimum 10% move in Microsoft before he starts making money. And so pretty aggressive trade into Microsoft, both from a volatility perspective and a underlying perspective. Mike, have you guys been fooling around on Microsoft? What do you think of this Windows 10 launch?
In using it, I have not had a chance to download it yet. I know what they're trying to do with Windows 10 is they want to make it kind of the all-encompassing thing that can go on your PC, your tablet, your phone, whatever. I have not had a chance to give my opinion on it as of yet, but in terms of this trade, I like the fact that the trader is at least doing a call spread, and that he's buying a 50-55 call spread as opposed to just buying the 55 call straight out. But in reality, I'd have a hard time taking that on right now because you have to be bullish on tech for Microsoft to do well. I'm personally not bullish on tech, so I like the trade strategy. What I don't like is I think it's a little bit far-fetched. Now, with Microsoft, they are doing slightly better going into today. Now, I haven't studied it yet today, but going into today, since they launched Windows 10, they are slightly better than what the S&P is doing. So you could say in theory that things have gone well for Microsoft since Windows 10, but I think this trade's a little bit too bullish for my taste personally.
Indeed, I don't disagree. The next trade was done by a pretty sharp guy, Pinnacle Entertainment, PNK. I'm going to look and see what these guys do. PNK. Pinnacle Entertainment is the owner, operator, and developer of casinos and related. They own Ameristar in East Chicago. Then they own a bunch of Ameristars, it looks like, and they own a few other things. Cactus Pete's, they own the Horseshoe, a few other things. Trader that had been a while back, earlier in the year, put on a big risk reversal, buying the September 35 calls and September 36 calls against being short at the 20 level in puts. So he put on a risk reversal and paid some for it. Unwound that trade today, pretty big profit. Net, I think he paid about $1 for the spread and got to sell off his calls in two pieces for $3.55 and $2.70 respectfully. But he didn't just take the money. He took the money and rolled. So he sold 10,000 of the 35 calls to close, sold 2,500 of the 36 calls at $2.70 to close, and then bought 20,000 of the 39 calls for $2.05. Pretty impressive. So it was basically a long 1, long 0.25, or short 1, short 0.25, long 2. Just a huge trade from a guy that's already won in this name. It's not one I follow. Mike, have you ever looked at this one before? I know you've been to the casinos before, obviously.
Actually, I try to avoid them as best I can. I've been there, but I try to avoid them. It's kind of one of those, I always look at it to where they don't build those fancy casinos off of winners. So
no, that's true.
But anyway, with that, with PNK, I like the risk reversal in general. I think that just adds so much flexibility to the trade. I like doing a short the put, long the call. There's so many things you can do with that as opposed to just owning the stock. You can get out of the put after the stock goes up enough, and then you took off probably 90% of the risk of the trade to begin with, and you still have all the upside, and you can do that for a matter of pennies. There's just so many things you can do in the risk reversal world. So obviously you have to be right. You can lose money on the risk reversal too, but in terms of the setup, the potential opportunities that exist, this is just another example.
Yep, and one thing I will tell you, and Mike can probably agree with this, when a guy has won pretty big in the past and then puts more money down on it in size, he's usually right. All right, final trade, Potash Corp of Saskatchewan, trading $25.82. This was a pretty interesting trade. Now, obviously, we all know what Potash does. The trader bought 2,500 of the Jan 25 puts for $1.57. And then against that, he sold 10,000 of the 23 puts at 81 cents, creating a 1-by-4 and collecting a credit of about $1.67 a spread. So basically the guy is saying, trying to create income, but saying, Potash may have some sort of further downside. but he clearly doesn't think that it's going anywhere below $22 a contract. Otherwise, he wouldn't have done this trade in any real size. So he's given himself, call it 10% downside protection, and taken in a nice credit of, about 6-7% of the stock price between now and January. Mike, do you? I know you've looked at potash in the past. What are your thoughts on this guy?
Yeah, you gotta love potash, and I'm not talking potato salad for those of you Southern folk out there. Potash is one. What I like about this is that, once again, it's similar to the risk reversal in that you have some flexibility on it. You have a plan if it goes down. You have income. This offers a lot of flexibility. POT is a very liquid option trading name, so there's a lot of things with which you can do on it. Really like the trade. Not really too keen on any individual stock right now, potash included, but if that's what your sentiment is on that, I think that makes a lot of sense, assuming the guy knows what he's doing.
Okay, great. So with that, that'll be all. That's all I saw in terms of truly odd and unusual. Although really the overall market was odd and unusual today. Just before we settled, there were some really interesting trades that went up in VIX. One of the things that there was a pretty consistent. He's losing bad right now. There was a pretty consistent VIX September 16 straddle seller, and lots of September paper that traded. But everything else beyond that was bought. So kind of interested in that. That was kind of the way everything traded. So now with that, we'll roll out of the odd block and roll into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
And here is the mail block. Welcome to the mail block. Here's where we're going to cover some listener questions, and we got two from one great individual. All right. And so these both come from Mark Brandt at Mark Brandt 1KM. And he said, one thing I've learned that you guys don't discuss that much is how return on margin is paramount to retail traders. What do you think about, is that, do you want to start with that, or do you want me to do it?
I'll start with that.
All
right. So a couple things in terms of margin. Margin can be a very important thing, or it doesn't necessarily have to be. In my opinion, first off, let's define margin. There's margin that you have to sign the margin agreement in order to trade options, and there's margin in that you need margin to leverage yourself on naked options or portfolio margin or something along those lines. So, for example, if you open up an account at TD Ameritrade or Interactive Brokers and it's an IRA, you have to sign a margin agreement. Now, that means that you're not leveraged. You're not able to do any leverage options. So, in other words, you can't buy $200,000 worth of stock in a $100,000 account. And it also means that you're not able to sell a put when you only have half of the value of the underlying or 25% of the value of the underlying. You have to be cash secured. So that type of margin, I don't really consider margin. It's just that in recent years, more brokers are calling that margin. It just kind of depends on how you define it. Now, the type of margin that I'm guessing you're referring to is something along the lines of portfolio margin, where you're selling a naked put and you want to, instead of, let's say, XYZ stocks at 10, you want to sell the put for the $10 put, and you only want to have $2.50 or $3 or something along those lines in your account. Or if you're looking to buy stock on margin, you're looking to buy $200,000 worth of stock in a $100,000 account. So in my opinion, with most of my trading, margin is not needed. Reason being is that if I'm going to sell an option, I typically use a spread. If I'm going to sell a put, typically it's cash secured. And the reason with which I do that is that if I do care to lever myself, instead of selling more puts and trying to get totally naked, typically what I would do is just sell another spread. I'm fine taking that on. Now, here's where I would use margin and where I think it could be a factor. For example, let's say that you have a large single stock position and you need to hedge it. Well, you need to use margin for that, and for that you're going to need to borrow money from your broker. The rate of return on that is something, or I'm sorry, the cost of borrowing money from your broker is something that is very significant in that decision. So from my standpoint, that's very important. The other way with which I would use margin would be, let's say that I had a basket of stocks, and I'm talking like at least $500,000 worth. I'm not talking about your $20,000 trading account. I'm saying you have $500,000 worth of stock, and maybe you need some cash to do something, whether it's buy a real estate property, whether it's to do something to provide some liquidity for your own small business, whatever. What portfolio margin can do is that can provide for you that line of credit if need be. So, for example, you have $500,000 worth of stock, and you need to take $50,000 to take on a loan because you need something for your small business, let's say. That's one way with which you could use it. Now, does that mean that that's the right thing to do all the time? Good gosh, no. But if you look at the margin rates at Interactive Brokers, for example, when you can borrow money at the 1% level and you have a portfolio margin account, the way with which I described it, yes, it is a variable rate. So if interest rates do go higher, then that margin rate will go higher. But that's another thing with which to consider on it. I'm personally not a naked option trader. I'm a cash secured put seller, but I'm not a naked option trader, so it's not a huge thing with me. The only other way with which margin would play a factor with me would be along the lines of, let's say you need to trade and I'm oversimplifying this. You sell a bunch of puts one day and you need to get out of them the next day, and then maybe you want to buy a bunch of stock and you sell that stock the next day and you want to buy more stock the day after. Well, a lot of times you'll need margin because of the fact that stocks take 3 days to settle. So a lot of things to think about, but for the most part, for using leverage with options, my opinion is that just buying a call option gives you all the leverage you need personally.
Yeah, and so the thing to think about leverage, and I understand what his point is that retail traders often take on risk that a professional trader would never take on. The amount of margin they use relative to what a market maker or even a professional trader like myself is, the real risk they take is a lot higher. And that's probably what I think is the biggest retail mistake is they over-leverage themselves and over-margin themselves using Reg T margin and don't realize how easy and how quick they can lose money. And they have a $10,000 account and they use 8,000 of it. Where, when I'm trading, I don't have many trades that take more than 5 to 10% of my true of my marginable assets. And that's kind of the other point I think in this stuff is that you really do need to be careful, and that's really where one has to maintain and manage their margin, and so I think that's kind of maybe the real key. So with that, we'll roll out of the mail block, and we'll roll into the Mark's Thoughts. The Mark's Special Chat segment. This is when I take something off market, maybe talk about it in relation to the market. And today I'm going to talk a little bit about risk and reward. Mike, I was relatively pleased when I went on the Ashley Madison leak. There was no
Here we go.
There was no Mike Tusaw at RCM Wealth. None of your old emails. I even went through some of your personal emails. Not a one registered at Ashley Madison.
Very good. I was lucky enough to get one woman. I couldn't handle two.
Exactly. So, and so let's talk about the risk reward. And many of these people just experienced the personal equivalent of what's called blowout risk. So when you're trading, there's this concept of a blowout, and that's if everything in the world goes wrong. All right, every single thing goes wrong. That's really how much money you can lose. So when you go on to a site like an Ashley Madison or anything like that, and, anywhere trolling, all right, trolling for girls, trolling for whatever, all right, while there is likely a daily, call it a carry that one collects, right? One can do, one gets all the benefits getting to be married and not having to be faithful. But there's also this blowout risk. And, just like there's no such thing as a free lunch, there's no such thing as an option trade where one can collect carry and not have risk of losing a lot of money one way or another. And the gentlemen and ladies that decided that they wanted to have their cake and two just experienced what happened to a lot of people in '08, maybe what happened to some people today in some stocks in Disney. And so if one takes an approach and thought process to trading that one does in their personal life or vice versa, one can really avoid blowout risk. Personally, we just heard Mike Tusaw, right? He was not on the Ashley Madison site, nor was I. And now listen to how he talks about hedging and protecting. Listen to how lots of people that are really good at managing assets and protecting assets also protect their personal lives and protect their families. And I think that if we all took risk management, an approach to risk management to the same approach to risk management as we did in our personal life, one will either have lots of highs and lots of lows or a smooth, happy lifestyle. And that is my daily musing. Mike, anything to add to that, or is that a big, huge stay away?
What you just did is you doubled our ratings, because now we can talk about on the show promo. It's going to say Mark Sebastian discusses Ashley Madison and option trading risk. Who wouldn't want to listen to the show now?
Indeed, who would not want to listen to this show? So with my musing now over, let's move into Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
And this is Around the Block. This is where Mike and I are going to talk a little more shop, and we're going to take our best stabs at what might happen next. And Mike, what do you think?
Well, to the upside, obviously, we're not going to hit our new all-time highs tomorrow unless we have just a super major 5% up move. So I'm not even looking at getting into the upside or missing out on any upside tomorrow. But to the downside, we are 5% off of our all-time highs right now. 204 on SPY was somewhat of a level of support. It got broken in the aftermarket today. But I think that it's one where I'm fine just missing out on this, and in the meantime, I'm selling it out of the money put spread with much less deltas on the table than what I typically have for being bullish. And if somehow that one can work out and the market doesn't go down too much and the market's down and we're up on the year, I'll be a happy man, quite frankly. So I'm just watching the numbers. I think the next level on SPY with which to take a look would be around the 198 level. That's around our lows of January. And then below that, we'd have a long way to go any further. So I'm just very laser focused on the numbers at this point. The Fed's released their minutes. I think the next big thing that's coming out is to see if they actually do raise rates, and we'll see what happens.
All right, there you have it. So this is interesting. Heaviest volume day since 2012 today in terms of trading volume, and just kind of an overall crazy day in general. And, we had the NASDAQ down over 3% today. I'm going to make a firm prediction that we're not going to see that. But I do think that there's a real strong chance we could see another 1% some odd down day tomorrow. And things could be ugly. We may not get – it may take till Monday or Tuesday for us to shake through this thing. I think what we may end up seeing is a Fed governor come out and say, hey, all is well. And – not to worry, and, we're not raising rates because I just don't see it with everything going on. And, the next real level and this is where we might hit some bouncing. I'll be interested to see whether we do over the next day or two, Friday and Monday, threaten that 2000 strike or that 1980 level. Could be pretty fascinating. So I will be interested to see kind of how things move. And so with that, Mike, what else is going on at RCM? Anything exciting?
Well, we did get calls, or I got calls from clients today just asking for advice on things, and those are the self-directed clients. At RCM, we have self-directed clients, and we have clients with which we manage money. If you are looking to trade under the RCM umbrella at either Interactive Brokers or TD Ameritrade, feel free to give me a call. Our commission rate is typically less than what you would pay if you tried to negotiate on your own. But where I think the real value is where you have a day like today, you can call someone who doesn't necessarily have a vested interest in you making a trade and actually give you advice. We make our money off of fees. The commissions we pass through are just the same commissions we pay. We have over $100 million under management, so we don't pay very high ones. So if you're looking to do something along those lines, feel free to give me a call at 312-212-3531 or send me an email at mtusaw@rcmfs.com.
All right, and we have this is your last chance to take our special Saturday class on condors and other things like and butterflies. Go to optionpit.com/condor to take the class. It's $147. Use code 25_OFF, all capitals on that OFF, and you take an extra $25 off. So just $122. It's always free if you are a Option Pit Live subscriber. So there you have it, folks. And on that note, I will wish everybody a wonderful day and evening, and I will talk to you guys. I'll talk to you guys soon. And that is all for the Option Block.
Have a great
Till
day,
next
everybody.
time, folks. Bye, guys.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.